Today I'm laying out my exact plan to buy 8 houses in 2025 step by step. You'll see the type of properties I'll be targeting which are perfect for contractor B&Bs, how I'll fund the deals, and the system my team and I will use to make it all happen. If you've ever wondered how to scale a property portfolio, this is the blueprint. Why am I setting this challenge? Because scaling to 8 properties in 1 year isn't just about growing a portfolio. It's about building a system that generates cash flow, long-term wealth, and freedom. Here's the reality. Most investors get stuck after 1 or 2 deals because they don't have a plan to scale. I want to show you that the right strategy, funding, and team is 100% possible even if you're just starting out. FYI, I will be buying these assets without viewing a single property. Every property will be a perfect fit for my Contractor B&B strategy, which in 2023 and 24 has had over 76% direct bookings, and on average, each property spits out 2K net profit per month. Stick with me and you'll learn not only how I'm doing this, but also how you can use these principles to grow your own empire. So, how am I going to pull this off? Let me break it down. Step number 1 is the stock. I'll be focusing on affordable, high-yielding properties in the Northeast, perfect for contractors and short-term stays. Think properties in the range of 100 to 150k, undervalued but have massive potential after the refurbishment. Back in 2018-19 when I started, I was buying smaller properties because that's all my budget would let me afford. However, as I have transitioned over the years into buying larger stock, I have realized that the majority of my profit comes from these larger houses. I also realized that the majority of the contractor guests were also coming from these larger houses. So over the last 2 to 3 years, I have got rid of the smaller stock. I have come away from buying anything less than a 3-bed house that can be converted into a 4, and I mainly buy 3, 4, 5-bed houses with the option to add an extra bedroom. These are perfect for contractor B&Bs and have been the linchpin of my model over the last few years, which allows me to increase my direct booking game from sub 20% to north of 75% year on year, and also a profit margin in each and every house from £800 to £900 per month to well over £2,000 per month. Step number 2 is the investment breakdown. I'll be funding these deals with a mix of my own cash, private investor funding, and recycling the funds from completed projects. For example, on past deals, I've been able to buy, refurb, and refinance properties to pull most of my cash back out. This strategy will be key to scaling fast. So in case you don't know, BRR is a very, very lucrative strategy when done correctly. Effectively, we're going to buy a house that is run down. We are going to spend money to refurb it. Obviously, when we buy the property, it is under market value. After the refurbishment, we will then get it revalued, and then we'll put a mortgage on that to pay the funds back out at the higher price, and that then gives us more cash to be able to go again. So I started my journey with only £3,000, and I've managed to build a multi-7-figure portfolio by recycling money over and over and over again through the properties. So let's take a look at the data based on the averages of the last few projects of 2024. Okay, so let's look at the purchase and plan to make sure that I can afford these 8 deals per year. So first and foremost, what I'm going to do is dive into the averages of 2024. So let me just run you through the information. So on average last year, we were purchasing properties for around 95,000. Stamp duty, broker fees, fairly standard stuff. And then the borrowing costs, which is typically 6 months worth of borrowing on bridging loans, would make up the majority of the cost. Then we would have the refurb cost on top, which on average was around 47,000, and then we would have the average revaluation was coming in at around 175,000. So the on average project cash outlay per project last year was just shy of 91,000. The average bridging loan that we were taking out was 66,000. The average mortgage after we had the refinance, so 75% of the 175 was 131, which meant there's a difference of 64,000 and therefore a shortfall of 25,000. So on average, we are leaving around 26,000 in every single property that we purchase. Now, this is really, really important for cash flowing how I'm going to buy these 8 projects going forward. So we'll see here, we've got months 1 to 12 and cash required. We need 91 for every single project. Okay. Now you'll see here, I've highlighted in colors, Ryan, company, private investor. I'm going to explain that in a second. but we need 8 projects at 91,000, which is a total of 728,000 is what we need. So I'm going to invest 91,000 out of my pot to get the ball rolling, should we say. Okay, so we're in January here. I'm not expecting to get anything over the line in January. I'm hoping that we can pick up a quick purchase in an auction in either late December or January so that we can get keys in month number 2. And that's when I will then be asked to deploy the funds, the 91,000, which is here, the typical project cash outlay. What I'll then do in 6 months' time, so 1, 2, 3, 4, 5, 6, I'm expecting to refinance that property. I want a 4-month project time, so here's the project here, and then I'll have 2 months to get it refinanced. I'm expecting to then get out the majority of that 91,000 minus the 25,000 that we'd leave in. So in month number 7, I'm going to put a further 25,844 into the pot, and that means I can buy another project. So you'll see here, the 2 blues match here. So I've got Ryan's buying that and Ryan's buying that. So in month 2, month 7, I will be deploying funds. So I will be putting into the pot 116,844 in the next financial year. So next calendar year, sorry, not financial year. So the company profits, what I'm also going to do is I'm going to allocate 25 grand of company profits towards reinvesting. I think as you grow as a property business, you have to be really keeping your costs down, trying to not take out as much money as you can, especially probably in the first 5 years, and reinvest as much as you possibly can so that you get the compound effect of buying more and more property. And it's going to hopefully hit home when I show you the income that this whole exercise is going to spit out. So from January, I will invest 25k company profits into the pot. So 1, 2, 3, 4, I need 91k to buy a property. So as you'll see here, orange is company. In month number 4, I'm going to buy a property through that money that the company has amassed. I will then continue to invest the 25k so I can buy another one in month 8. So I've got 200k. I might not need as much as that because, as we said here, we've got 91k per property. However, when we come to refinance, remember there's going to be a 25k shortfall. So that's why I've chose 25k as a number, because it will mean that that shortfall is covered, and therefore the company can buy 2 more projects, even though I'll be buying all the properties in the company name. I'm just saying from the company's money, from the trading profits, I'm going to allocate 25k to be able to buy more properties. So we've got 1, 2 from me. We've got 2 from the company trading profits. That means I need to buy 4 other projects using other money. So I'm going to use private investor funding. So I need 91k in month 3 for a project. I need 91k in month 5 and month 6, and I need 91k in month 9. So I have to go and raise 364,000. So that was the point of this exercise. This money here, I know I am in full control of. This money here, I need to go to my trusted investors, pitch them the deals, and see who is open to lending me the funds. I will typically, pay anywhere between 8 and 10% for that money. If anybody is watching this and you would like to get involved, then just drop me a DM on Instagram and we can discuss it. But I will use the money here now. This is where you're probably thinking, well, if I borrow 91, but you're leaving 25 in the deal, then how am I going to pay them back? And this is where this model is like genius, and it works so well. So you remember that it's going to take about 6 months to do the refurbishment and ultimately get the refinance. So the first shortfall is going to come in month 9. So I'm going to be buying in month 3, and the first shortfall is going to be coming in month 9. I expect the projects to take no more than 4 months. So after month 4, they will be live and we will be trading. And I've proven time and time again with this stock type that on average, the net profit is around 2 grand a month. I don't want to go into the depths of my business operations and the costs. I kind of explained that in some of the recent videos, but I genuinely think I can add probably 30 to 50 more of these properties and not have to add any more operational staff members. I may need to add some more maintenance and a couple more cleaners, but there's nothing major going to change on the cost front. So this 2k net profit is pretty robust. So in month 5, which is going to be when the first project we get the live, we've got it furnished and it's live, that's going to bring in 2k a month. Okay, so every month thereafter that brings in 2k. And then as you'll see here, because we're hopefully going to buy, one project per month. And listen, I've invested enough in property to know that there's a good chance we'll end up buying 2 in 1 month. We may have a gap month, but the idea of this exercise is to show you how the numbers work. And over a 12-month period, it doesn't really matter. It will still play out. So in month 2, the project that we bought here in month 3 will also then be live, so that's going to add another 2k in, plus we're getting the 2k from the property that we set live the month before here. So we're now accumulating 4 grand, which is an accumulation of 6 grand between the two. Month 7, we've got the next project live. Month 8, so on and so forth. Okay, so we go all the way through where we've got all 8 projects scheduled. Now you remember here that we're going to have in month 9, this section here, we're going to have a 25k shortfall to the investors. Now let's just look at the accumulated profit from the projects as we go through. We see here I've actually accumulated 30 grand of cash flow from the deals that I have got on in this year, right? This is the plan. So from these deals here that have come on and started spitting out all this cash flow here, I've actually got 30 grand. I owe our investor 25 grand. So these properties are going to pay the first investor shortfall. That's going to also leave a surplus of around 5 grand. What we then do is in month number 10, we're going to accumulate 12 grand from the next lot of properties. And then in month number 11, we're going to accumulate 14,000. Okay, so 26,000 is then accumulated over that period. And guess what? In month 11, we then refinance the second investor project, and we're going to be then needing to pay them back. So we use that trading profit to pay them back. And then in month 12, we're going to have 16 grand from month 12, because obviously we've used all this money, and all the previous monies to pay this and this back. But in month 12, we're also going to have an investor to pay back where we're going to be short. Okay, so we're going to fall about 9 grand short. Now, in my business, I can swallow that. I can pay the investor back. It's not a problem. I could pay it out my personal funds. I could pay it out of company funds. That is the luxury I've got, I guess, of, being 5-6 years into this and having, a pretty robust business. If you didn't have that means, then you would either have to restructure this, or maybe you could just agree a post-completion payment plan where they're still getting interest and it works for you and it works for them. There is enough cash flow every single month on a net basis to be able to agree a payment plan to pay back any shortfall over a short period of time. Remember, property is not a get-rich-quick scheme. I plan to own these properties for decades. They're spitting out 24k net profit per year. So even if I had to do year 1 or even year 2 of making no money, or very limited, or half of it, 50% of it, let's say, and then thereafter I get to have 2 decades worth of 24k income a year, that for me is worth using somebody else's money. That for me is worth paying interest and doing a deal that works. So that would be our 12-month point, right? That would take us 12 months. Now, for the ones that have kept up with me, you'll realize that there's actually only 3 paybacks here, and there's going to be another one in month 13. So in month 12 and 13, I'm going to have to probably pay back somewhere in the region of about 50k, and I'm going to have collected, I'll have the 14k from there, and I'll have 16k from there. So I'll have 30k, and then I'll have another 16k from this month's trading here with all these 8 profits. So I'm going to be left a bit short, but as I said earlier, I have the means and the ability to be able to pay that and put that back. So that is how I am going to fund it. That's how how I've worked the maths out, how I know I can do this. I need 728 in total. I need 364 from private investor money. You can see there the shortfall is 77, but you can see here the income's 72. This is not luck. Like, I have strategically done this for years and years and years. This is how you grow a portfolio properly, okay? You take all emotion out of it, you logically do it on spreadsheets, and you work the numbers out. And as long as you've got averages and as long as you know what you're doing, then it should play out. The other part to this is then the targets, all right? The KPI targets. Now, what we do here is I know this, right? This is actual data from our 2024 trading. So of the properties we saw, we only made 38% offers, okay? And of those 38% offers, we had 6% accepted. So if I want to acquire 8 deals, I need my team to be doing 7 a week. So all I then do is speak to my team on a weekly basis, and we pop the numbers in here and see where we're at, and it will change all the way through and let us know what our pace is. As long as we keep on pace, we will do the target. Like, we will. Okay, now there's a few factors that we can then try and improve on. So one could be, let's go over, right? So let's just make sure. I lost 2 deals this year, which fell through, and therefore I fell short of my target. So there is, in the back of my mind, I want to chase 10 because I know that there's a good chance that a couple may drop off, okay? So I need 9 viewings a week from my team. Now, if we actually analyze the deals better before we go out on a viewing, and we know that it's more in line with what we maybe want, and don't get me wrong, we're very good at this, and but sometimes you get out to a property and it just, you know, like we did one last night. I was working with my team last night. I found it. I sent them on a viewing. It looked like a 25k refurb. After the team's gone in and funny, I analyzed it. It's nearly a 50k refurb. So on paper, it looked like a deal, and then once we've gone out, it's not a deal. All right, we can't make an offer on it because it's already got an offer higher than what we would want to pay. So that then fits into, you know, sometimes why you don't make offers. But if we could, you know, let's just say increase our offer percentage to 50% rather than 38%, then obviously we only need 7 a week. If we can increase our acceptance rate to 9%, we only need 4 a week. But I've done this for years now. We've, you know, I've personally viewed over 1,000 properties. My team have viewed hundreds, if not thousands, over the last few years. This data pretty much runs true in terms of metrics, and I would say we're pretty good. We're established. You know, we've always got proof of funds. Agents want to work with us. So this data is pretty reliable for an experienced investor to work from, and I don't think we can tweak it too much more. So really, my team will be set the target of 9 viewings a week, and then I will just keep pace with them, you know, as we go through it. FYI, if you want any of these spreadsheets, just drop me a message on Instagram, and I'll send them over to you. Step number 3 is the team. This isn't a solo mission. I have a trusted team on the ground in the Northeast, including my own deal sources, contractors, and guest managers who streamline the entire process from finding the properties to managing the guests. In 2024, I fell 2 projects short, and for me, that's not good enough. I want to ensure that we achieve at least 8 this year, and the key metrics of number of viewings attended, number of offers made, and ultimately the number of deals accepted is going to be crucial to actually pulling this off. When you know how to run this strategy, when you know how to raise the money, when you know how to find the guests, everything else is just data. All we're doing is plugging the numbers in, and as long as those numbers are hit, the averages play out, and we should be able to get the number of deals that we're after this year. Step number 4 is tracking the progress. So weekly calls and tracking the projects through our project sheets are going to be crucial to actually pulling this off. Over the years, I've learned the hard way of allowing tradesmen just to do as they please, not keeping them on time, paying before I even should have, and being burnt on that front. You have to be on top. I am a big fan of controlling the entire process. One thing I've learned over the last 5 years in this game is the more control you have on every single element of not only the refurbishment, but also the running of the properties, your cleaners, your linen, absolutely everything, the more your business will thrive and the more profit you will make. So it's fundamental that I have regular conversations with my team on a weekly basis to not only track how many viewings we've been on, how many offers are getting accepted, how the projects are going, what the money's like, where the refinances are, all that sort of stuff. This is what will ensure that we hit the target of 8 in 2025. Without tracking the numbers and without speaking to my team, I could not do this. I am running this whole gig from right here in Dubai. Yet I am buying the properties in the UK as that's where I invest. My team on the ground are going to be fundamental to doing this, and I have to make sure that I am leading them in the right way and helping them make the best decisions so that we can go through these projects at speed. Realistically, we want no longer than a refurb to take 4 months, and I want the full purchase to refinance no longer than 6 months. That's going to allow us to spin the money over and over again so that we can make sure that we acquire these 8 properties and it's all funded and it's all streamlined, and more at the point, it's zero stress. One thing that I have carved out over the last few years, which I see a lot of service accommodation Airbnb hosts doing, is they build these stressful businesses. One thing I will not do is put myself or my team under stress to make this happen. It is not required. We do not need it. And that is why we go after the ContractorBnB style property. No longer do I need a massive team to actually operate these properties. The average length of stay is well over 20 days. These guys are staying for months and months and months. I do not need to be turning the properties over all the time. So not only is the stock type crucial at the beginning, but it's also crucial to the operation and the limiting the stress on the back end. So what are your next steps? Dive into the ContractorBnB strategy. Find out where this niche works around your local area. Figure out how you can raise your private capital to be able to buy multiple assets per year and build the trust with those investors. Then go and find the stock based on your KPI metrics. You'll know how many viewings you need to go on. You'll know how many offers you're roughly getting accepted, and that will then play out throughout the year, and then hold yourself accountable to those results. If you would like any of the spreadsheets in this video, then just drop me a DM on Instagram. Please don't forget to subscribe, and I look forward to seeing you on the next episode. I'm off to the beach. Take care.